Okay, so we all know the name Warren Buffett, right? But what if I told you there was an investor who quietly built one of the greatest track records in history almost completely under the radar? Well, that's what we're going to do in this explainer. We are diving deep into the story of a guy named Reece Duca.
And, his entire journey, this financial empire he built, it started small. I mean, really small. Just $2,000. That was it. That's literally all he had to his name when he showed up at college.
So what happens next? Well, the next 50 years are it's a total masterclass. It shows you how a tiny seed of cash, when you plant it with some serious strategic genius, can just explode into something huge. This is compounding in action, folks, like textbook. So that $2,000? Yeah, that turned into a multi-billion-dollar fortune. And get this is the crazy part. He did it all with zero outside money. No management fees, nothing. This was just pure, hardcore, disciplined investing. The real deal. So that's the billion-dollar question, isn't it? How on earth did one guy pull this off? And I'll tell you right now, it wasn't luck. Not even close. It was a crystal clear, repeatable, and seriously powerful framework. And we're going to break it all down right now.
All right, so where do we even begin? Well, like a lot of great stories, it starts with a great education. See, Duca's whole philosophy, it didn't just appear out of nowhere. It was really forged by a couple of key mentors who gave him the intellectual tools he needed to win.
First up, at UC Santa Barbara, he had a professor named Herb K. who totally opened his eyes to the idea of resilient businesses. Then, when he got to his MBA at Stanford, another professor, Jack McDonald, just drilled him on the hardcore discipline of value investing, the school of thought from guys like Graham and Buffett.
So here's the takeaway, right? His entire foundation was built on two incredibly simple but super profound ideas. First, find companies that can survive anything. We're talking truly anti-fragile businesses. And second, have the discipline, the sheer patience to stick with those companies, just like the OG value investors.
Okay, so that's the philosophy. Now let's get into the mechanics, the how-to. Because look, knowing what to buy is only half the battle. Knowing how to build a portfolio around it, that's a whole other ballgame. And this is where Duca really went against the grain.
Okay, look at these numbers. What's so fascinating here is the acceleration, the snowball effect. So it takes him 3.5 years to turn $2,000 into $7,000. Okay, not bad. But watch what happens. As his brain gets bigger, the compounding gets faster. That $75,000 he had when he graduated, just 5 years later, it's $2 million. That's the power of this model in action.
And this brings us to the big question everyone's probably thinking. I mean, every Finance 101 class screams, diversify, 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 right? But Duca, he did the complete opposite. Why? Well, because he understood a fundamental, and I mean fundamental, truth about where wealth really comes from in the stock market.
And this chart just lays it out perfectly. So there was this huge study by Professor Bessenbinder. He looked at 90 years of market data and found something that should honestly blow your mind. Get this. Just 4% of all public companies, just 4%, generated all of the net wealth, 100% of it. So what about the other 96%? Well, altogether, their returns were basically the same as just sticking your money in super safe government T-bills. I mean, they created basically zero real long-term wealth for investors. Wild, right?
So when Duca saw this data, the conclusion was just obvious. If you want to beat the market, you absolutely cannot own that bottom 96%. And diversification, by definition, guarantees that you will own them. So if you want truly incredible returns, you have to do the opposite. You have to concentrate your bets in that tiny, elite 4%.
Okay, so that makes sense, right? But if you're only going to own a handful of companies, man, your stock picking game has to be elite. It has to be world-class. You need an insane filter to find those winners. And that's exactly what Duca developed.
He had this amazing term for it, fanatic reliance. The whole idea is to find businesses that are so deeply woven into their customers' lives, into how they operate, that the idea of leaving is it's almost unthinkable. They are absolutely mission critical. You simply cannot do without them.
Now, he didn't just land on this idea on day one. It was an evolution. He actually started out as a generalist, investing all over the place just to learn the ropes. But pretty quickly, he had this aha moment. He realized that software companies just had way better business models. I mean, they can scale up to be enormous with almost no extra costs. And then he got even more specific. He zoomed in on what's called vertical SaaS. That's software built for one single specific industry. And that's what makes it so incredibly sticky. It becomes the lifeblood of their daily operation.
So let's make this real. Look at some of the companies he invested in. The Learning Company, it became totally essential for schools. Advent Software, that was the digital backbone for basically every investment manager out there. And Appfolio, it's the absolute operating system for property managers. You see the pattern here, right? Each and every one of them creates that deep, fanatic reliance we were just talking about. All right, this brings us to the last piece of the puzzle. And honestly, this might be the hardest part of all. Because you can have the perfect foundation, you can have the perfect strategy, but if you don't have the right mindset, none of it matters. It's all useless.
Man, I absolutely love this quote from him. It just perfectly nails his psychological edge. Real conviction, it doesn't come from being cocky. It comes from deep, deep knowledge. If you've really done your homework and you understand the business inside and out, you don't freak out when the market freaks out. It's like you see the line on the other side of the glass, but you're not scared because you know the glass is indestructible.
And you can really see the difference here. The typical investor, they're running on fear. They're trading all the time, chasing hot tips. Duca's whole approach is the polar opposite. He's confident, but because he's earned it by doing the work. He's patient because he knows he just has to let the compounding do its thing. And he's a totally independent thinker.
Yeah, he was a huge fan of Charlie Munger's whole philosophy of sit on your ass investing. And the key insight there is that a truly fantastic business is like a partner. It's out there working for you 24/7, even when you're sleeping. So your job isn't to trade all the time. Your job is to find that great business, buy it, and then just get out of the way. Just let it work its magic.
And maybe this is the real secret sauce at the end of the day. His focus was never really on the money. It wasn't about the score. It was about the game itself, the love of finding and helping build great businesses, creating real value, and working with people you respect. The billions, that was just a byproduct of that obsession. Which kind of leaves us with this one last thing to chew on. We just spent all this time breaking down one of the most successful wealth creation machines in history. And maybe, just maybe, the ultimate key to it all is not caring about the money at all. What do you think about that?